Okay, we are live.
Thank you, Josette. Welcome, everybody. Thank you to the URA NAP Enterprise Zone Tax Credit in collaboration with KIZ Resources and Lindsey Bennett we have here today. I'm Charles Hudson. I'm a business strategy officer for the Urban Redevelopment Authority of Pittsburgh. And we have with us Josette Fitzgibbons, that many of you probably know, working in the city of Pittsburgh for a long time as the business district's manager with the business district managers. And she runs that program, and I think has maybe for 13 years or so. But we're happy to be here with you. Josette's going to back me up. And Lindsey's going to be our presenter. This is the first of a series this year. We did it last year where we went through the Enterprise Zone Tax Credit, the PA Historic Tax Credit. We did a second series, which we'll also do in mid-April for the Research and Development Tax Credit and the Keystone Innovation Tax Credit. So you'll see these. I don't think I can advance my screen there, Josette.
Just hit your click on your button or hit your space bar. It should advance.
There we go. Right. There we go. I had it was frozen. Okay, thank you. Okay, so I mentioned in the future, we're going to have a webinar announced in mid-April for the Keystone Innovation Zone and Research and Development Tax Credit. But I want to tell you a couple of things that we do in Business Solutions that we've been doing this year. Of course, we mobilized to work with emergency loan funds in the beginning. We started with grants, and then we started with loans, and then now we're into the COVID recovery and beginning to move forward, and with business growth and business expansion. So something that Business Solutions is doing, we serve a bit as a concierge service for developers that are coming into the city, trying to research tax credits and loan programs and any grants that might be available in the city to do your development, looking at low-income housing tax credits and RCAPs that our project managers work with the developers and the project teams to navigate through the state and the city and what might be available. Within the URA, we have two new loan programs now. One's called the Pittsburgh Business Fund, and it's a loan designed for gap financing that goes up to $500,000 from $150,000 to $500,000. And we have a new product called ABLE, an accelerator business expansion loan, 4% interest. It requires 10% equity, and it can be used for working capital, for construction, for land, any of your equipment build out needs. So it's a really good product. And so these are two things that are new for us, reasonably new, that are available borrowing inside the URA. We also have PIDC, a subsidiary within the URA that is a certified economic development organization that represents DCED and the PETA loans. They underwrite the PETA loans. And as I said before, the RCAPs the application round is about over for this year, but you can work with the URA project managers to find out if you're eligible for the RCAP and to apply for that. The tax credits that we'll be talking about in mid-April, you'll see that in the next webinar coming. So I don't want to move and take too much time going into the different tax abatement programs. So Lindsey will have more time to work through her presentation and any questions that you may have. So I really thank you for being here, and I look forward to working with you. If you have any questions, you're working on a development, you're looking for site location, you're looking for funding. If you have some resources that you need researched, you want to look at URA properties, city properties, this is what Business Solutions does at the URA. So I'm not going to stop sharing just yet. I'm going to go back to the other screen. And I'm just going to give you a bio of KIZ Resources. KIZ Resources LLC is a full-service government incentive firm. They're located in central Pennsylvania. Their primary focus is on Pennsylvania programs. Their mission is to provide clients with superior service in all aspects of obtaining, purchasing, and selling tax credits. We strive to foster and support a successful and stable business community throughout Pennsylvania by working with local businesses, development agencies, and nonprofits. And I will mention last year that Lindsey and KIZ helped many applicants in the city of Pittsburgh. We had 8 applicants. They all received enterprise tax credits last year, everyone that applied. Lindsey worked with several of them, working to help them put their applications together. And she can talk a little bit more about that. The city of Pittsburgh got $3.4 million allocated to the city. And that was 32% of the state allocation for enterprise zone tax credits. So we felt really good about working with these with the webinars and with Lindsey and trying to assist folks with as much TA as we could to get the applications in and help them clarify what they needed to put together. Now, Lindsey herself, Lindsey Bennett, she's a tax credit specialist and serves as the operations and marketing director for KIZ Resources. And in that position, it allows her to work with a wide range of clients, obviously, and provide education available for incentives and assisting with the application and sale of that process. So I'm going to stop sharing my screen, Lindsey, so you can pick up and introduce you to everyone, and we can go ahead and learn from your expertise.
All right, let me open this up. Well, thank you very much for that introduction, Charles, and for everything that the URA does. You guys are, vital to keeping all of these programs functioning and helping companies kind of navigate the plethora of programs that there are out there. Charles already introduced us for KIZ Resources is a private company not affiliated with the state. What we try to do is educate people on the various tax credit programs that are available in Pennsylvania, and then help you through these processes of acquiring these credits. So there are many, many programs. I love this alphabet soup of programs that we have here to go over. The goal today is not to go through all of them. We're just going to highlight 3 that are upcoming application cycles will be opening for. But there are a lot of incentives out there, and just being educated helps you to not leave money on the table. So thank you for joining us today, everyone. So the main program that we're going to talk about today is the Neighborhood Assistance Program. The Neighborhood Assistance Program is administered by DCED's Office for Community Services. And the key components there are to help communities, neighborhoods specifically, through certain types of problems and issues, to bring those communities back and make them more vibrant and functioning, and provide job opportunities and all kinds of things. The neighborhood assistance umbrella encompasses multiple programs. So we're going to talk about all of those. In general, is to help more of the low to moderate income families that are located within those neighborhoods, to provide sustaining jobs, affordable housing, help with crime prevention, and food assistance, to just keep everybody in the community healthy, safe, all of those components, and just make a real vibrant neighborhood. So there's lists of projects there. That's not an exclusive list. There are many other things that can encompass a neighborhood assistance type project. Job training is a good one. Any sort of affordable housing, and anything that you're doing to help with improving social injustice issues. This year, there's also a special emphasis on COVID relief type things. So a manufacturer who is able to change some things in their product offering line to help with PPP, not the loans, PPE, the protective equipment and different things that are needed, different projects, even just to help clean up the community and get rid of blight. Those are all types of programs that are supported through the Neighborhood Assistance Program. So of the 5 components of the under the NAP umbrella, there's $36 million available that they now allocated. It used to be an $18 million program, and they doubled it because they were getting way, way, way oversubscribed. So each year they would get probably close to double the amount of applications that they had and credits to give out. So there were a lot of projects that were not getting funded. And the enterprise zone credits especially took a big hit on that, because a lot of the nonprofit organizations were doing these partnership programs that were multi-years, and they needed to be funded each year. You know, they didn't want to start supporting a project at the state and not finish it. So there's 5 different programs that they kind of broke out so that you can apply based on what's going on within your project. The first 4 all relate to the nonprofit organizations, and then the last one, the enterprise zone, is for for-profits. So in general, the General Neighborhood Assistance Program tax credit is a 55% tax credit that the donors of a nonprofit can receive for providing their donation within the state's fiscal year for a specific project that the nonprofit wants to do. So the nonprofit might be looking at a job training program where they are offering like a CNA program for nursing. It could be a construction type program, any sort of job training to help people be able to go through that program and have a job at the end. And they work with the local businesses in the industry. That's an example that could be an NAP project, a 1-year project, and the businesses donating can get a 55% tax credit for that. The second program is called Special Program Priorities, and these are ones that the state has indicated for a 1-year project that are specific targeted problems that they want to address that are occurring within the state. So right now, of course, anything for COVID recovery and things to help raise awareness to social injustice, or items to help eliminate and social injustice issues. Those types of things are definitely part of that special program priorities, as well as other, disaster recovery type things, initiatives, veterans initiatives, blight removal. Even, rural communities often don't get the benefit of certain projects because it's a broader area to reach. So it's not just defining one neighborhood. So if you have a rural initiative, outside the city that you're trying to incorporate a program with, that's something that could happen with the special program priorities. And the biggest benefit of getting that designation is that your donor, instead of a 55% tax credit, can now get a 75% tax credit for their donation. So a $10,000 donation just went from a $5,500 tax credit to a $7,500 tax credit, just by the program fitting this particular criteria. And the guidelines for the state have a longer list than what I have on here of the different types of programs that qualify for that. The third program there, the Neighborhood Partnership Program, is for a strategic plan that the nonprofit is doing. So in cooperation with other community members, there's a strategic plan for a 5-year or more project undertaking that's going to be happening. And that could be, like a blight removal type thing, or city beautification project, or something on a larger scale than that even. Those credits, those donors can get that 75% tax credit for their donation. And for this, anything that's above 5 years, so 6 years and on, they get an 80% tax credit for the 6th and 7th years if there's a longer term project there. Those types of projects do need to be well thought out. And although it's a 5-year project, the nonprofit still has to go through this application process that we're going to break down and get into here shortly. But you have to go through that process every year, or else you don't continue in the program. And then there's, some issues there, of course, with your donors who were expecting to get this credit for 5 straight years. There's also some caps. There does have to be, I believe, a $50,000 donation commitment from the main donor there, and you can't change your donors in that program. So they're in it in the long haul. They're part of that collaborated business and community partnership. The fourth program then is the charitable food program. So this one is specifically designed to help the regional food banks and any programs and projects that are specifically relating to food insecurity and shortages and things like that in the state. One of the biggest contributors to these types of programs would be grocery stores. Food that is not expired yet, but about to expire, they can donate to the food bank, and the fair market value of their food donated from the grocery stores can count towards that 55% tax credit of what they're giving there. And that goes for all of those programs. So if you are a nonprofit and you're looking at doing a building project or a city beautification project, and you need donations of street lighting and benches and different things like that, you can go to businesses and ask them to donate the materials, the products, and the fair market value of the materials that are given can also count towards those as your donation. And then the last program is the Enterprise Zone program, which is for-profit companies. So it can be a business that you're just renovating your own business where you're going to operate from, or it could be a developer who's doing a development project of a building. It can be renovations. It could be a new building if it's something that had to be raised, or a blank canvas to work from. And that's 25% of the 25% of the expenses that go into it, up to $500,000 in credits. So up to a $2 million project would max out. That, not that your project can't be bigger, but only the first 2 million of the project can qualify for the program because it is capped at 500,000. So to go a little bit further into the application process for the nonprofit side. So whether you're going after any of those programs, there are 4 key components that every applicant must answer within their project narrative in order to be successful in getting these credits. The first one is the place. So the state wants you to really define specifically the neighborhood or community that is going to benefit from this. So statistics on the community, where the region is, the outline, if it's a particular neighborhood or set of blocks that you're going to be revitalizing or helping. So some background information about the place. The problem. So what are you solving with your project? Is it the need for crime prevention services? Is it the need for blight removal, job creation? Is it that the community has suffered a large loss in somewhere? So you kind of define the problem of what you're working to.
Lindsey, can I mention something right here about the jobs that John and Pro wanted me to mention?
Sure.
John and Pro with DCED was wanting to make sure when we talked about the jobs that when they're building out their narrative that they, this year, to be a little more specific, they had to go back and forth quite a bit last year to get applicants to flesh out the skill level of the retained jobs and the new jobs. They really want to see this year the number of positions and the pool of the applicants. How many miles within your location are they within the neighborhood? Is it requiring a high school degree? Are they going to be trained in-house? Do they have a bachelor's degree, a master's degree? And whether there are union type jobs, or whether it's shipping jobs or warehouse jobs, they want to really focus more on the job itself. And so when you're building out that job creation and job retention, really try to stratify what that is and who you're pulling from. And she's even, mentioned that perhaps, talk about some local schools and maybe some programs to bring in to see your development, and with some educational type programs for students in urban schools nearby to really show some of the community impact as well. So I just assured her I would mention that, Lindsey. So thanks.
Yeah, absolutely. That's a great point. And I'll mention it again too whenever we talk more on the enterprise zone side. For those jobs, don't just think of, you're having an office building and you're going to have entrepreneurs in there, but you have a large office building, there's going to be people that need to clean that building, do maintenance on that building, et cetera, et cetera. So it's more than just, one specific type of role typically, to make any building kind of continue. But very good point, Charles. Thank you. So then the next P, once you've kind of established what it is that you're trying to fix, is to just flesh out what your project is. So if it's a building project, what you're going to do. If it is you're feeding people, talk about what you need to expand your reach of how many mouths you can feed per day, et cetera. So just kind of fleshing out the project, include the budget, where the money is going to be spent, so that they can clearly see what the uses are for a donated project. And I think that is really helpful too when you're reaching out to your donors that you want to commit to give you funds, is to make it clear to them, hey, we need to put in a gym floor in our building so that we can provide a safe place for kids to come after school and get some energy out as part of our after school program. Right now, they're just stuck in this small room, and the gym needs redone. So, it's a good way to get the donors excited behind that. And be specific. So you can only go after an NAP project one time. So if you have a project and it has multiple phases to it, be specific about what phase you're talking about and what you're going after, because you can apply the following year for the next phase if it makes sense. But you can't go after, oh, we didn't get enough money to finish our kitchen project, so now we have to go back and ask for more money for the same thing. You can't go after the same project again. It has to be tweaked and be done real differently. So make sure that project section is very clear and defined. And then the last thing is the proposed outcome. So that's where you want to talk about what successes you're going to be able to measure, whether it's, again, the increase in the number of dinners that can be served to the local community, if it's the increased street lighting to make it a safer thing, how many blocks is it going to benefit, how many jobs are going to be created, those kinds of things. And there is an Excel spreadsheet that goes within the application for those proposed outcomes, but you also want to mention in the narrative specifically what the key ones are for your project. So the key thing for a nonprofit organization is the credit is not based on your want and your wishes, what you hope to do. It's based on what you have commitments for, what the state believes you can accomplish within their fiscal year. So to get the strongest application, it's best to have businesses submit letters of support and letters of commitment of a donation that they're willing to give. So the support letters can be from any organizations that you work with and just, what the need is to help support the program. The commitment letters are the ones coming from the businesses that are stating, I'm going to donate X if this application is successful. They believe in your project and they're going to provide that commitment letter. They do not have to give the check at the time of the application. They just have to give the commitment letter. And actually, in this case, we're starting the application process here before the fiscal year starts. You don't want them to give their check until after July 1. So the commitment letter is literally that. It's just a letter of support. If you are unable to get anybody or enough to cover your project, enough donation commitments, you can provide a comprehensive plan to the state of your solicitation, what you're going to do. So they don't want to just say, we're going to canvass the neighborhood, anybody is fair game. They want to see some targeted businesses that you've selected, that you've either already had some conversations with and you're just working with them to kind of iron out the details, or specific businesses that you do want to target for a purpose or for a reason. The state has limited funds, so they need to be able to quantify what can happen within the year and who's going to give what. So by August 31st. So the application itself is due May 28th, and that's hard and fast. You can't submit an ESA, the electronic single app, past that date. But for a nonprofit who is still in the process of soliciting the rest of those commitment letters from their donors, you have until August 31st per the guidelines this year to provide the rest of those commitment letters. So that's kind of the hard and fast deadline for that time frame. So at that time, you need those commitment letters to be clear and defined. So somebody can't say they're going to give $5,000 and then want to change their mind and give $10,000 and get more of a credit. They'll only get the credit up to the amount that they said they were going to commit to, because the state has to allocate those funds specifically. The donations then can start getting collected anytime after July 1st, but of 2021, and they have to be received no later than June 30th, 2022, to qualify for the program and for the donor to actually get the tax credit. The nonprofit, so the state's application process, which opens on Monday here, March 29th, they will wait and review all of the applications once they're received. So we probably won't know of who is officially awarded these credits until after that August 31st deadline there for the nonprofits to get those last commitments in. At that time, then they'll finish up their review of all the applicants, and I would guess it'd probably be sometime in October or November when the awards will go out. So once the donation's made, the business has one other step they need to do. So when the nonprofit is awarded the credit based on, they've hit all of those guidelines, the nonprofit is notified of the award, and also all of the donors are notified of the award to the nonprofit. And they're provided with the specific form, the tax credit form, that they have to submit to the state in order to receive the tax credit. So once your donation is made, you do need to provide that as a donor to the state, a copy of proof of the donation. So the check, front and back of the check that it was deposited by the organization, along with that, that completed application for tax credit. And then you receive the credit. The nonprofit itself actually has until September 30th, 2022. So there's 15 months total for them to expend all of the funds received for the project. And then they have some closeout documentation to provide to the state once it's all done to show those measures that they were hoping to do, the outcomes and everything, to show the success of the project. One other note on the donor side is that the donors do need to be tax compliant before they receive a tax credit. The state a couple of years ago made a rule that anybody who's going after any sort of tax credit does need to be tax compliant. So whenever you're applying to the state for tax credit, the donors will submit a compliance form online that goes directly to the Department of Revenue, and they double check to make sure that all of your business returns are filed. They look at sales tax, employer withholding tax, and all of that for the businesses, as well as the owners who own at least 20% of the credit or more. The businesses can use those tax credits against their corporate net income tax. If it's a flow-through entity, it can flow through to the owners or shareholders and be used on their taxes. They have a 4-year carry forward that they can be used, and then they could also be sold. So if you didn't need all of the credits, it's been a weird year for a lot of companies as far as what their taxable liability was at the end of 2020. So for a company that ended up not needing to use all of their credits, and they might want to sell a portion of those, that's also an option with this. Any other questions on the neighborhood assistance nonprofit side? Oh, a 5-year carry forward.
Lindsey, I got real quick question. Somebody had asked, of course, we're recording. This is going to be on the URA website, the recording. Someone asked if the presentation could be shared. So could it be put in the chat at some point, perhaps, or somehow shared in a...
Yes, I can upload the file here whenever I'm
Okay, whenever there's a break, sure. Okay, thank you.
Yeah, no problem. Okay. All right. So the credits, yes, they can be used for 5 years. So the year that they were awarded and then 4 additional tax years, I think, is the 5-year window. So moving on to the enterprise zone program, the neighborhood assistance enterprise zone is then designated specifically for those for-profits organizations. So these will be going to businesses who are located within these targeted zones. Those zones do expire. I've had conversations with people who are in an enterprise zone that is no longer active. So you can't apply, unfortunately, for tax credits if your zone has expired more than 2 years ago. They did in the guidelines and in the law of the program, an enterprise zone had an expiration date. And then for 2 years past that expiration date, companies could still apply for tax credits. But beyond that, the zone would need to, the zone administrator would need to go back and do a redesignation or, be an impact zone. And that's a process. You have to, define the space. The URA has had to go through that process before, and that we'll probably have to again in another year or two. I can't remember when the zones are up again.
And we
Charles?
plan on having it in on Q3 this year to apply for the next 5 years. So we're in the last year of the 2-year extension. So
Yep.
so
And you don't want to have any missed
no
opportunities.
gaps.
No gaps.
Also, Lindsey, I want to just announce Jonna Pro has joined us. Josette told me she just came in. She saw her come to the waiting room. So Jonna Pro with the DCED, she runs this program, and she assists all the applicants and myself, the coordinators throughout her region, to work with applicants to get their materials in. And then she works to have them evaluated at DCED. So at some point, if Jonna Pro wanted to interject or come in, we just wanted to open that space for her and introduce her to the group here. So welcome, Jonna Pro.
Absolutely. John is
Thanks,
definitely somebody
thanks,
that
Charles. I'll wait till Lindsay's done and then take questions if she needs me to.
Thank you.
Yes, so as the enterprise zone side, you have to be within these targeted zones. So the actual enterprise zone program, which was the original program that spurred all this, and there's still some revolving loan funds and things like that among a lot of the local organizations who administer the local enterprise zones, as well as some of the other Keystone community, Keystone Main Street, or and other Keystone community type programs. I'm not sure if the Elm Street side of it qualifies for it, but definitely the Main Street programs and the Keystone Communities Enterprise Zone designations. And some of those cities and towns that got those designations as well can qualify for these enterprise zone credits and apply for them. So when you're going through this application process, you of course are answering those 4 Ps that we talked about with the nonprofits the same way. So you still have to define the place, the neighborhood that your building project is happening in, what the problem is in the region, how you're going to, what you're going to accomplish and do, what kind of project it is, all of the specifics about your build out. And your tenants as close as you can define who your tenants are going to be, and then your proposed outcomes, what you're going to accomplish, how many jobs are going to be created for the most part. But it can also be blight removal, or affordable housing is going to be offered, those types of things. So this one is for the for-profit companies. You do, again, have to be tax compliant, just like for the neighborhood assistance businesses who are applying to donate. The businesses who are going after these credits and the owners who own more than 20% have to be tax compliant with the Department of Revenue before a tax credit can be awarded. The approved projects can get 25% of the credits. We talked about that, up to $500,000. And the eligible activities are basically anything that's going into the project that is like a hard cost. So any sort of rehab, the walls, the roof, the HVAC, plumbing, electric, all of that. It can be new new construction as well as the rehab, land improvements, and then also some of those soft costs like engineering, architecture, some other fees and costs. It can include acquisition if you have some of those other permitting things and different things in place, so that you so that we know that the project going into the application cycle fits the zoning and all of the regulations within your neighborhood.
Lindsay, I want to mention one more thing that Jonna brought to my attention. A few of our applicants last year, when they were applying and working with their budget numbers, they didn't put the total project cost. They put in the tax credit amount they were hoping for, the 500,000, and then we're allocating the cost. So there had to be some, back and forth and getting some things squared away. So let's make sure this year on our applications that we know to get $500,000, you have to have a $2 million project, because it's 25% project. So your overall project is what is being considered, the total cost of the project. And you get 25% of that, if awarded, to be considered for this tax credit, which can go up to $500,000 for the tax credit. So make sure you know the difference between, that you're delineating the difference between the overall project cost and the amount of the tax credit that you're hoping to be awarded. That's it?
Charles,
Yes.
let me just jump in there, and for anybody on this call who's thinking about the enterprise zone tax credit, the fault with that is ours, not the fault of the applicants. And you'll see it when you go into the system to apply. I'm hoping that the budget spreadsheet has been updated. But if it has not been updated, you may read it to think you need to put the tax credit amount in. You do not. As Charles said, put your total project cost in, and once you hit the submit button, it will calculate how much the tax credit would be.
Yeah, next time I do this, I am going to do a screenshot of what the budget page on ESA looks like, because it is confusing, and you can put different funding sources for your budget and all kinds of different things. You can really, it's an elaborate spreadsheet that you can use within that budget, but really all you got to do is just list, your construction costs, your soft costs, all of those categories out of your actual budget. The 25% thing doesn't come into play, absolutely, but that gives me an idea for my next go at this presentation, is to include that screenshot to make it a little bit more clear. So along with the enterprise zone, it's not just, that you're doing this building project, which is great, but you also need to key in on how you are helping the distressed community, and specifically the low to moderate income individuals within that community that you're going to benefit. If you're creating jobs, which there should be a job component, that are full-time equivalent, family sustaining wages, have benefits, and they should be, eligible for those low income individuals within the neighborhood. So if your business is going to be moving in there and you have a specific skill, and Charles had alluded to this before, that needs to happen for your employees, talk about the job training that can happen and where that pool of applicants will come from, as well as talk about all of the jobs for the maintenance building. If you're building a multiple offices within the building and having several different tenants, a retail space on one level, a coffee shop, whatever it is, talk about all the different types of jobs to make that building happen, and where that pool of applicants will come from.
Yeah, really flesh those out, whether, like I said before, whether they're high school and they'll be trained in-house, whether they have bachelor or master degree, if you're drawing within a certain number of miles from your location, and if they're union jobs, shipping, warehouse. The DCED wants to see a little bit more thought put into the job creation and a little more future plan of how to maintain and sustain those jobs and what pool of applicants you're looking for. So let's try to be really specific with those jobs this year.
So then within your narrative, you're just defining all of these things, including the place, problem, project, and proposed outcomes. And that gets uploaded, but also within the single application, for assistance. That's the online. DCED uses this application for all of their programs. So sometimes the questions don't seem to make sense for what exactly you're trying to come across, but those key points get also posted and listed, you know, what you're trying to accomplish, who you're trying to help within that application as well. So you need to not just say see attached, you need to fill in and address those things on the online application, as well as the, you know, narrative that you're going to be uploading. The project is for activity that's going to happen within the state's fiscal year, but you do have additional 3 months, according to the guidelines, to complete the project. So you have from July 1st, 2021 through September 30th, 2022 to expend all of your funds and complete your project, and then submit after that you'll submit all of your closeout materials. There's an audit process that has to happen once you've completed your project, as well as, you know, officially applying for the tax credit. So if you're awarded a credit, you get an allocation of the credit in a contract that you sign with the state that says you're going to do what you said you were going to do. Then you complete your project, and then you submit your audit that verifies the costs are within the budget that you had given to the state at the beginning. So within that audit process, an independent CPA is going to look at it's like a checkbook audit. They're going to look at the expenses, you know, make sure they came from the right entity to and fit them into the budget categories. If one of the categories that you thought you were working on, whether it's HVAC or something changed drastically, and it's going to be a larger than a 10% variance from what your original budget is, they just want that explained. DCED just wants to know, you know, what the difference was. Did cost of materials go way up? Was there an internal issue within the building that created that additional cost? So just a little explanation about that. There can be extensions. So if, like last year, nobody knew what we were facing whenever we started with the COVID pandemic, and it caused a lot of delays in a lot of things, unfortunately. So if, you know, there's delays outside of your control, and with any construction project, delays can happen. Materials can become unavailable. And there should just be weather could cause a month or two delay. Different things can happen. You may request an extension from the state. They will review those on an individual basis and may grant you, you know, an extra month or two or whatever you would need to, you know, is what you would ask for in that process. But for the most part, you know, July 1st to June 30th is the usual timeframe when I try to tell people to try to get stuff done. You do have that additional 3 months that the state is allowing you to spend extra money through September 30th, but you know, you want to get your project done within that time frame. So
Lindsey, just FYI, we're at 1:48, so we got about 12 minutes, I guess.
Okay. So real quick here, I'll go through, this is kind of the list of things that you need to include in your application. We can talk about this in the questions if you have further questions about it, but you need to have a confirmation that the zoning, your project is within the zoning of the city or the neighborhood that you're doing your project. You need cost estimates to match your budget. You're not just pulling them out of the air. You have an actual hard cost estimate. Any sort of rental agreements, or if you for the project that you're doing, or the deed to show your property ownership. The subcontractual agreements, those are like things if you have tenants that are going to be moving into the space, what those look like. And then just general information about you as the applicant, your financial statements and general profile and information about you and how you're going to get this project done. The qualified investment is important. They want to see that this project will happen within the year. So they want to have at least a commitment letter from the bank that the loans are, if not secured, close to being secured. You need to work with your local coordinator, which is Charles in this case for the Pittsburgh zone, and also have a conversation with Jonna as our regional coordinator to make her aware of your project whenever it goes into the state. And for the larger projects, so if you're getting more than $250,000 in tax credits, so you're spending $1 million or more, they want to see a cash flow analysis of how you're going to support this project going forward. And I like to just mention there that these credits, they're not really something that's going to help you on the front end. These credits are for that kind of working capital going forward to help you with that cash flow after. You're going to get the tax credits and then either use them or sell them after you've already done your project. So you have to have your funding secure without these credits. And these credits are kind of the help that you need to keep things cash flowing going forward. And then we never want to displace residents. So we want to make sure you have a statement about that. And then of course we talked about the job stuff. I think we talked about this quite a bit already. I would anticipate that the 36 million that will be available for this year will probably all get used. So you want to get your application together, put it together in the best way you can, and get them in early if you can. Don't wait till the very, very end and hope for no technical issues. They're due no later than 5 p.m. on May 28th. There have been times where the program's been oversubscribed and they have prorated down a $500,000 tax credit, maybe got $250,000 tax credit so they could support more projects. So that could be something that could happen, but again, we're still kind of in a little bit of a pandemic era, so it might not be as large of a year. The last program I'll just talk about real briefly, I'm not going to get into a lot of details, would be the historic tax credit. So if you have a building that is located within a historic district and is a contributing building or is listed individually on the historic registry, you can qualify for both federal historic credits and possibly Pennsylvania historic credits. The federal program and the state program work off of the same Secretary of Interior standards for historic rehabilitation. You do need to spend more on the renovation costs than the purchase price, is kind of like the significance test, that you're not just putting a fresh coat of paint on it and moving on and getting credits for that. It does include hard costs and some of the soft costs, but acquisition is not included in these types of programs. The federal credit is a 20% tax credit. There's no cap on that. The Pennsylvania credit, it is a 25% tax credit of your costs up to $500,000, but unlike EZP and NAP, where there's 36 million in that pot, there's only 5 million available in this pot of credits. There's a pretty comprehensive application process for the federal program. If you've gone after the federal program, the state program gets a little bit easier to apply for, but it is very competitive just because of the amount of credits. But there's a part 1 stating, the significance of your historic building, and then part 2, which is your plans, which needs to include photos and materials used and all of that good stuff. The federal credits can be used and carried forward for up to 20 years. The state credits can be used, they carry forward for 7 years, and they can also be sold just like the enterprise zone credits. I'm not going to talk about any of those other programs. We at KIZ Resources do work with all sorts of other programs, but I want to save time for any questions specifically. And if I missed anything, Jonna, that is key to this application process, let me know. But our role is we do assist with the application process. We operate on a success-based fee, so it's no out-of-pocket costs if you aren't successful in receiving the credit. We then can also help with the sale process and helping you monetize that credit if you're not able to use it all on your own tax liability. Our company started from an accountant, so they have good knowledge of the tax code and how it can be used and sold in PA. So we try to make everything as secure and simple to follow as possible. So I will open it up.
So Lindsey, we have a question. Is KIZ a tax credit consultant? Sorry, Charles just answered it.
Yep.
Well, they
is
are a broker.
Yeah, we're both. So we can help and be a tax credit consultant and help you define which types of programs you should go after, and help you with the application process. And then we can also help with, if you already have a tax credit, we can help broker that to our list of buyers to sell the credit.
Okay, and Jonna has her hand raised.
Yes.
Lindsay, what's the going rate on the tax credits? I mean, you know, I could have given you an answer pre-COVID, but at this point, who knows?
Yeah, right now we're still seeing probably an average price of all credits. So there's so many different programs, and some credits come in and they're really tiny and they might sell for, 90 cents on the dollar or less. And then there's some credits that are huge and $5 million at a pop, and they might sell for 95 cents on the dollar. So it's still within that range. The average price for like an enterprise zone credit is probably 92 or 93 cents on the dollar from the buyer's perspective. And then, just depending on if you're using a service for your application process, what other fees come out of that. Most companies net somewhere in the mid 80% range, clear of any fees.
Lindsay, I don't know if you can drop that PowerPoint in the chat while you're fielding questions, but if that's easy to do.
I can do that, yes. Let me actually stop share here and escape out of my presentation mode, because that will make it easier for me to do that. And this is going to be just from
Hello, Marquis. Did you have some particular question you wanted to ask Lindsay yourself, other than you're muted there a bit, but I think you're saying you're good.
Just see. So this is still going to be PowerPoint because I don't have it saved as a PDF yet, but if anybody wants a PDF, I can certainly email that out after.
Yeah.
And I will
Charles, I just want to say hi. I'm sorry.
Hello, Marquis. Great to see you.
Great to see you as well.
And I will say that whilst Lindsay did a wonderful job, I will give you my 3 words of advice. Read the guidelines. Read the guidelines, folks, whether you're doing the nonprofit portion of NAP or the enterprise zone tax credit piece of NAP. Please read the guidelines. Most of the information, most of the questions you will have will be answered in the guidelines, right? And I think Charles and Lindsay and myself, all get those phone calls from folks that, that we're happy to answer, but really read the guidelines. They will tell you specifically what you need.
Yeah, though it'll really give you a heads up when you start compiling everything, and it's all laid out in there. And then, of course, I am certainly willing to work with you guys, any way I can, and trying to clarify it and go through it. So, as is Lindsay. So, just please communicate with us and give yourself a heads up on the right questions asked by looking at those guidelines, thoroughly in advance.
Let me see.
Go ahead.
Let me see if this link works here that I made. I don't know if that's gonna. Try to click on it myself. See if that gives you my PowerPoint.
Yeah, and I also, if anybody wants any further specific information, or you're unable to get to the PowerPoint we're trying to get into the chat, of course, that'll be saved. I can send the information back out to you. Just email me.
There we go.
There she is.
And I will leave my email as well.
Thanks, Josette.
Yeah, get out there and do your projects. It's going to be a quick round.
Yeah, we've only got about 1 more minute. So with this application opening up a little earlier, March 29th, and going through the May 28th, of course, just get on your horse, get the information together, apply for this, get your documentation together. You've got 15 months till September the 30th to complete the project. A lot of people use these tax credits for collateral on other, lending and such in the future after you're awarded, obviously. on future endeavors. So, you know, it's a great tool for you. It's great for the community to provide the service your projects do. And the URA and the DCED, and of course, working with Lindsey, ourselves trying to do this and help people in the city of Pittsburgh, we really wish you success and want to work with you. So I'm going to wrap up and just thank Lindsey for being here. I really appreciate Jonna Pro for being here, and thank you, Josette, for handling, you know, back of the house and keeping things moving. And it's been great to be with you guys. I look forward to seeing your projects. I look forward to reading through your narrative and getting the coordinator letter to you, the URA EZ coordinator letter that goes to the DCED about your project. And again, I just thank you for being here and look forward to working with you down the road. And Lindsey, it was wonderful. Thank you so much.
Yeah. I'll hang on.
Anything else, anyone?
The questions. So
Looks like the questions are filled today. Yeah.
Thanks, everybody.
Thank you, Jonna. Thanks, everyone. I'm going to stick around